Bitcoin hits new all-time high at $116,000, nearly $1 billion shorts get liquidated, markets Liveblog. Analysts and longtime industry participants weigh in on how this week's Bitcoin price action resembles or differs from past bull runs. Bitcoin just breached $116,000 after blowing past $113,800 on Thursday, setting a new all-time high. The oldest digital asset has been on a tear for the last several months and has nearly doubled over the past year, climbing from $57,899 a year ago today. CoinDesk analysts and industry experts are watching closely to see if Bitcoin BTC $117,945.62 can rise to $120,000 or if this week's price action is just an ephemeral gasp. This Liveblog will be updated regularly. Scroll down for the latest. Tough day for the shorts. Thursday's move higher in prices liquidated over $950 million in leveraged short trading positions across all assets on exchanges, the largest amount in a day this year, CoinGlass data shows. Shorts are bearish bets anticipating prices will decline. Bettors in the prediction market CalSure are pricing in Bitcoin hitting $141,000 by the end of this year. The forecasted BTC price is based on the price of recent trades that were put on the tape in the platform, according to CalSure. This isn't the first time the $140,000 price prediction showed up during today's 8H rally. Earlier, Jerry O'Shea, head of global market insights at Hashdex, said in a note, Ayan Ashraf, Nikoleshta 2205 Universal Time Coordinated. Michael Saylor now has $69 billion reason to celebrate. Michael Saylor, the executive chairman of Strategy, MSTR, gloated in Thursday's price rise. The halls of eternity echo with the cries of those who sold their Bitcoin. Strategy has accumulated 597,325 Bitcoin since 2020 when his company first started buying up Bitcoin, almost acting as a de facto exchange-traded fund before such products were available to U.S. investors. At today's new all-time high prices, his holdings are worth $69.29 billion. And as a reminder, here are the top public Bitcoin treasury companies according to BitcoinTreasuries.net. The vibes on Thursday felt eerily similar to mid-December 2017 when Bitcoin's price soared to just under $20,000 for the first time. The digital asset had gone on a tear in 2017, rising from just under $1,000 over the course of those 12 months. Of course, the broader environment is dramatically different in July 2025. Interest rates, the amount of capital invested into digital assets, the types of institutions involved. The regulatory interest and the sheer number of people in crypto are all different than 8 years ago. Here is at least one industry observer calling for a potential $120,000 for Bitcoin. Ryan Gorman, Chief Strategy Officer at Uranium Digital, said, "We are reopening the Liveblog to update for the new, fresh record for BTC. The price just hit $116,221 on Coinbase and is hitting new all-time highs above $116,000 on other exchanges. Just the wild 24-hour nature of crypto." The Liveblog will be wrapping up for today as the market seems to have calmed down for now. Bitcoin is trading around $113,400 while the Nasdaq and S&P 500 closed 0.1% and 0.3% higher, respectively. The US dollar index, DXY, inched slightly higher to 97.6. Speaking of USD weakness and risk assets, let's quickly look at a story written by CoinDesk contributor Siamak Masnavi based on an analysis by Kobaisi letter. This may partially explain why BTC hit a fresh high. The Kobaisi letter estimated that if the federal funds rate is cut by at least 3%, something that Trump suggested in his social media post, it could reduce U.S. interest costs by up to $2.5 trillion over 5 years, but warned that it would be unprecedented outside a recession. They cautioned it could reignite inflation above 5%, sink the USD more than 10%, and send asset prices soaring, including gold to $5,000 and the S&P 500 past $7,000. The precious metal is currently trading around $3,324 per oz, and SPX just closed at 6,280.47. Adding to market volatility, rumors have emerged that Trump might attempt to remove Powell for cause before his term ends in 2026, potentially replacing him with a more compliant successor. Such a move could accelerate interest rate cuts, further weakening the dollar and boosting demand for alternative assets like Bitcoin. Looking at derivatives, perp funding rates are at or below neutral for all major cryptos across the board. No immediate signs of speculative froth so far. As Bytree Chief Investment Officer Charlie Morris said in a market note this week, crypto feels quiet, but the quiet bulls are the best. On the altcoin front, things have remained relatively muted, with most large caps only rising 2% to 5%. Notable exceptions among the top 50 coins by market capitalization include Sway SUI $3.4441, Pepe $0.041245 and Dogecoin $0.2009. Which are up 12.4%, 8.6% and 6.3% respectively. The CoinDesk 20, meanwhile, is up 3.2%. Bitcoin is now in a negative dealer gamma zone between $112,000 and $120,000, derivative options data tracked by Amber Data shows. This means that to maintain a net direction-neutral portfolio exposure, which they strive to do per mandate, market makers will have to buy the underlying asset as the market moves higher, adding to upside volatility. In short, the trend could accelerate. Some are attributing Bitcoin's all-time high to global currency fluctuations, saying that while $113,800 is indeed the highest BTC has been relative to USD, it's not the highest it's been relative to other currencies. And indeed, valuing BTC in terms of the US dollar as opposed to other currencies or even other cryptocurrencies has long spurred debate within the industry. I apologize to my American friends for raining on your parade, but a reason BTC has made yet another 8H in dollar terms is the devaluation of the dollar. BTC/euro is still far from its 8H back in January, kissing face P. ic.twitter.com/ZHK7YVZR7J. Crypto-linked stocks are on fire, with crypto exchanges such as Robinhood, Hood, and Coinbase Coin rising more than 3% on Thursday. Meanwhile, the miners such as Hut 8, Bifarms, and Hive Digital are up more than 4%. Interestingly, the stablecoin issuer Circle, CRCL, the hottest new crypto IPO stock, is only up by 0.4%. The 2021 bull run's second half was purely leverage and derivatives driven. It had a 50% hash rate correction and all on-chain metrics were bearish, plus we had incoming Fed rate hikes for the first time. Market cycle is completely different with a new buyer in the market, a new Fed chair potentially incoming with cuts, and a crypto pro-US president. Also, don't forget the swath of Bitcoin buying treasury companies. Net accounts are still short. CoinDesk's Omkar Godbol mentioned this was a retail indicator. This is interesting, as in previous cycles we had retail euphoria, but not so much this time. However, while a record high for Bitcoin is almost certainly bullish on the surface, a number of technical indicators paint a different picture. The daily RSI has now made 3 lower highs. An example of bearish divergence indicating the move could be short-lived. Trading volume has also dropped off since the initial record high in January, and BTC is still below its respective record highs against Euro and GBP, indicating dollar weakness over BTC strength. Also, the trading firms I speak to are bearish, but it is worth noting that they were also bearish from BTC's $30,000 to $70,000 run in the last cycle's double top. Read more. This one metric suggests Bitcoin has plenty of room left to run. CoinDesk is the world leader in news, prices, and information on Bitcoin and other digital currencies. We cover news and analysis on the trends, price movements, technologies, companies, and people in the Bitcoin and digital currency world.